The next method for redemption of debentures is redemption in installment by draw of lots. That means debentures are not redeemed altogether in one single go. They are redeemed in installments. Now students, this condition for redemption is actually declared at the time of issue itself. And the manner in which the debenture holders are decided for which the money is to be redeemed is also declared at the time of issue. Generally, it is the lottery system through which it is decided which debentures to be redeemed at what time schedule. Now students, the journal entries are more or less similar to the previous method. So let us come to this question. A company has 5,008% debentures of rupees 100 each. They are to be redeemed in 2 annual installments by draw of lots on 1st January 2006 and 1st January 2007. So these are 2 dates on which debentures are to be redeemed. So now students, on first date, that is 1st January 2006, when we commence redemption, remember DRR or debenture redemption reserve should be created and it should be equal to 50% of the face value. So the entry would be P&L appropriation account debited to debenture redemption reserve. That would be 50% of the face value, and the face value here is 5,000 into 100, that is 5 lakh. So the 50% amount comes to 2,50,000. Narration is being reserve created for redemption. Now students, 50% of these debentures are to be redeemed on this date. So again same date, 1st January 2006, half of these debentures, that is 2,500 debentures, would now be due for redemption, and the entry would be debentures account debited to debenture holders account. The amount is 2,500 into 100, that is 2,50,000. The narration would be being 2,500 debentures due for redemption. Now students, on the same date, we will pass another entry to pay this amount to debenture holders. So on 1st January 2006, the next entry would be debenture holders account debited to bank. Narration would be being payment made, and the amount would be 2,50,000. That is the amount due on account of 2,500 debentures. Now students, this completes our target for redemption on 1st January 2006. Now in next year, the remaining lot of 2,500 debentures are to be redeemed. So on 1st January 2007, remember on this date, there is no need for creation of debenture redemption reserve, as we had already created a DRR equal to 50% of the face value of debentures to be redeemed on the first date in the first year itself. So simple entry would be for making 2,500 debentures due for redemption. The entry would be debentures account debited to debenture holders account. The amount would be 2,500 debentures into 100, 2,50,000, being debentures due for redemption. Then students, next entry on 1st January 2007 would be to pay this amount to debenture holders. So entry would be debenture holders account debited to bank, being payment made. And the amount would be 2,50,000. Now students, the entries for redemption on both these dates are complete and redemption has been done. But remember, in case of draw of lots as well as in case of redemption in lump sum, whatever amount that you have transferred to DRR should be transferred to general reserve once the redemption of all the outstanding debentures of that particular category is complete. That means now the last entry would be to transfer the amount that is there in debenture redemption reserve to general reserve. Now this entry should now appear as debenture redemption reserve debited to general reserve, and the amount was 2,50,000. That is the amount standing to the credit of debenture redemption reserve. The narration for this would be being DRR transferred to general reserve. Remember, this should be the last entry in case of redemption by lump sum as well.